Ladies and gentlemen, welcome back to another volatile day on Wall Street. Should we just call it a normal day, a nonchalant Tuesday in 2022, baby? It has been nonstop crazy. Today, you're getting a bullish reaction. This is mainly due to the bonds and the dollar, in which we will talk about. But we have major large cap earnings here in after hours, and that is really going to dictate what the next leg of this is going to be. Are we going to continue to the upside? If that happens, how high could we go? Where are our major resistance levels? And what would I personally be looking out for potentially to book some of those sweet profits if you caught the ride up of this rally? To the downside, what's the levels that we are looking at, right? We've seen a lot of downside. What could that look like if we fail these resistance levels? Now, on top of all of that information, we're going to talk about the data that is coming out tomorrow, economically speaking, and get this. Let's scroll to the top of this article. AMC Stock. Perhaps the apes were right about AMC Entertainment after all. Let's get into all of this information. Hit that like button and subscribe to the channel if you guys have not already. Thank you guys for watching, and let's get straight into this video. So first things first, let's talk about what's going on in the markets today and why I've been talking about the dollar and bonds so much here on this channel is because they are dictating what is happening with the markets as of right now. We're in earnings season, but we have not seen a vast majority of the market cap weighting of the S&P and the NASDAQ reporting earnings yet. That starts today when you get Microsoft, which is 5% of the S&P 500, 9% of the weighting of the NASDAQ. You get Google, that is about 5% of the NASDAQ, 3.5% weighting of the S&P. Those companies will be reporting earnings here in after hours. So depending on what those earnings look like, specifically these two companies, well, that's going to dictate the mood for tomorrow and potentially give us a glimpse into Apple and Amazon earnings as well. And once you get this week out of the way, guys, you're going to see that final move to the upside or to the downside. And as of right now, it's looking a little bit more bullish as of not. We've been able to string together now 3 positive days, something that we have really not been able to do for a while now. You have to go back to early September, over a month ago, to get 3 consecutive positive, 1% plus days for the stock market. Even back here in early October, you only had 2 positive days for the S&P 500, and we are really approaching a breakout level, and we'll talk about that here in just 1 second. But what's going on with the bonds today, guys? As you know, when the price of bonds goes down, when this chart is heading to the downside, that is bad. Very bad. And that's why you can see pretty much a direct correlation to the overall market performance based off of this chart, right? The stock market, during COVID, right? This was the COVID crash. Stocks flew after that initial COVID crash, and they did that because interest rates were so low. And even back here in March of 2021, you got a little bit of fear around that time, but the markets continued higher until the end of the year. We peaked out on a lot of big stocks like Apple and the S&P 500 back in early January of 2022, and it's been pretty much straight down ever since. So really highlight this area right here from my cursor over, and that has been the performance of the bonds in 2022. This area right here, it looks very similar to what has happened in the stock market. That is because when bonds fall, the yield goes up, and that freaks out markets. So what you're seeing today is the bonds are up 2.54%. This is the strongest positive day that we have seen in a very long time. I don't even think I could find you another day where TLT was up 2.5%, but I could find you a lot of days where TLT was down 2.5% on any given day. It's been pretty much straight down, like I just said. Now, on top of that, you are seeing the dollar down pretty much 1% today. It's bouncing around a lot. It's very volatile, but it's down about 1% today. And same thing, but opposite, right? When this chart goes up on the dollar, that is bad. When this is going down, that is good. Just to put this in simplest terms, this was the COVID crash. What happened? The markets ripped after COVID because of all the stimulus, all of the potential bailouts that we were going to see, right? People got free money. Dogs were getting stimulus checks. There was money everywhere. So why would the stock market not go up? That's exactly what happened, just for a little refresher of everyone's memory. And you could see the dollar went down. And basically the same correlation here. Let's see. From the beginning of 2022, the dollar was in this range. Pretty normal, about $25 here on UUP. And then what happened once you hit 2022, really once you hit, February, this rally. And this is really one of the larger down days that we have seen in the dollar in a very long time. So when you get the dollar coming down, just a brief little analysis and breakdown of why the dollar is so important. If you guys have not watched a video in a while from me or whatever the case is, and you want to retain some knowledge for basically the rest of your life, the easiest way to think about it is take Apple for an example. They do 55% of their business in foreign currencies. Now, when the dollar is low, that means foreign currencies are higher. So when Apple is taking in, call it 1,000 wands for an iPhone, and they go convert that to dollars to report their earnings. Well, if the dollar's low, that 1,000 won is going to get you, let's just call it $250. Well, if the dollar's high, then that same 1,000 wands is probably going to get you like $200, right? So that's the difference here. It's fundamentally bad for international US-based companies when the dollar is high. And the dollar is high because the Fed is tightening, because interest rates are going up. That's the long story short Econ 101 version that I can give you guys, right here. And that's why the markets are so positive today. But there's a little bit of a cap on this rally, because normally if the dollar was down 1%, TLT in this marketplace was up 2.5%, I would expect to see the Nasdaq up 3.5, 4%, the S&P up 2.5 to 3%. That's not happening today because we have these large mega cap earnings here in after hours, and it still could go either way for those earnings. If they're really good, that's probably going to make tomorrow one of the best days of 2022. If they're bad, well, potentially could be one of the worst days of 2022. No exaggeration there, but again, we'll just have to wait and see exactly what happens. Now, as far as economic data that we are looking at for tomorrow, you do have the Bank of Canada interest rate decision, retail inventories excluding autos coming out at 8:30 in the morning, MBA 30-year mortgage rates, stuff like that. That's not going to move the markets as much. But on Thursday, the day you have Apple and Amazon, you're going to get GDP growth rate, you're going to get durable goods orders, and you're going to get PCE, core PCE and normal PCE, and that's the preferred measure of inflation from the Fed, and that will be one of the main drivers, at least for Thursday morning, before we do get earnings for Apple and Amazon in after hours, guys. So there is all of the economic things that are really going to move the markets, things that are happening as of today. And on another note, if we take a look at AMC stock, and we'll just go ahead and pull this up on one of the open tabs right here, AMC stock is up about 5.60%. It's trying to break out above that resistance level at about $6.90 per share. It looks like we got rejected here, at least intraday today. We're going to have to see what happens by the end of the day. And if the markets are up big tomorrow, I think that could really be the big day for AMC, because after all, a lot of your riskier stocks are not performing all that well today. There's still a little bit of a cap, like I said, on this rally, based mostly because of the large cap earnings that are still yet to report. So I do think AMC, with the short interest sitting still around 20%, with the cost to borrow rate staying over 20% for the last couple of weeks, if not the last month or two now, that's really setting you up for a potentially very big rally. And the live short interest of free float currently at 18.78%. The live short interest, the number of shares that is sold short, sitting at 96.77 million, cost to borrow max at 21.38%, meaning there's been a lot of demand to sell AMC stock short. And for the most part, there has been shares available to do so. As you guys can see over here, there's been a couple million shares some days. Today, you're only looking at 50 to 80,000 shares that are available, and that's possibly why you are up 5.6% at the time of recording this video. But nonetheless, guys, let's switch gears to this article. And it says AMC stock, perhaps the apes were right about AMC Entertainment as entertainment after all. Apologies there. Now, what it says right here is key. It says AMC Entertainment should end up ahead of the movie theater crowd. And what he basically goes on to say in this article, it's a pretty long article, but he goes on to talk about consolidation. And what this essentially is, and what he makes reference to here is like the airline industry. Back in the 2000s, right, when a lot of airline companies were starting to go bankrupt, starting to close their doors, well, that opened a big opportunity for Delta Airlines, which he says right here now operates over 80% of the flights from Atlanta's Hartsfield-Jackson Airport, giving it rent-seeking power that's hard to dislodge. And what he's comparing this consolidation to, and why he's talking about this, is because of the Regal Cinemark bankruptcy that we just recently seen a couple of weeks ago, saying how AMC could really become the only national or multinational movie theater chain that you can even go to. So it's not like a monopoly. They're not buying out these other theaters, but they're naturally, these other theaters, going out of business, and that could be a very fundamentally good thing for AMC stock. And he says it takes years to get to that point, that the bankruptcy process is probably not going to be over very quickly, but over the next 6, 12, 18 months, fundamentally, it might make sense to actually buy shares of AMC at this level. And we'll go ahead and read this last article. And why I really wanted to put this here in this video is because I don't think a lot of people have really stopped to realize how that bankruptcy will affect AMC in a very positive way. The stock, yes, did go down a lot, whatever. The stock is different from the fundamental business, but ultimately the stock will follow the fundamental business. And like I said in the last video, guys, concerning a buyout and the valuation of AMC, the valuation is very attractive at these levels. So, it makes a little bit more sense to buy AMC at $6 per share. But this last article says, but if you want to join in on the meme madness fun, buying several shares of AMC stock isn't the worst idea in the world. It can't be any worse than a third Clooney margarita cocktail, because if meme investors have it their way, AMC Entertainment could one day become the last theater chain standing. And that's probably going to be the title of this video. The last man standing, baby, is going to be AMC, because we are the apes. And we get shit done, right? Everything that we have done as far as due diligence and all of this will come to fruition. In my personal opinion, 2022 historically has been the hardest year that I'm sure any of us has seen, myself included. The sentiment's bad, the fundamentals are coming off the peak, the Fed's raising rates the most aggressive pace that they have ever done, real estate's toppling over, there's nowhere to hide anymore. The only safe haven you could say is Apple, and if that thing gets destroyed this week, well, the markets might actually be able to find a bottom here. And that's why I think it makes a little bit more sense to go long on AMC at these prices. You're not buying a fundamentally egregiously overvalued company on a fundamental basis anymore. It makes a lot more sense to go long at these levels. So guys, that is going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.